This is, I think, in my client conversations, I can sense this almost Chinese policymakers and foreign investors are not on the same wavelength, in the sense that Chinese policymakers are thinking, to boost confidence, I need to set a high real GDP growth target. But foreign investors are thinking, if you're going to just achieve the real GDP target, you're going to produce more cars and more machines, and what you really need to do is inflation and nominal GDP. And Chinese policymakers are thinking, if I fix the CNY level, that's confidence, that's stability, that's power. But for foreign investors, they want to see, in fact, from any other free flow currency, you wanted to depreciate. That's easing your financial conditions. That's helping your economy. So a lot of times, I think the intention may be coming from the same place. We want confidence. We want China stimulus. We want China to sort of have a positive spillover on the rest of the world. But I don't think they are talking the same thing.
大家好，今天给大家带来的是高盛首席经济学家在接受美国媒体采访时对中国经济2025年的展望以及他的一些观点输出，主要是从地缘政治风险、房地产以及中国政府的一些政策制定方面去入手。话不多说，我们一起来看一下。
Bring in Hui Shan, Chief China Economist at Goldman Sachs. Maybe you can tell us what you're expecting.
I might as well wait with you and see what exactly they announce. Lots of headlines are coming out of China.
Yeah. Well, what do you think they could say?
I think the basic construct is that last Q4, when they increased the subsidy for consumer trade-in program, you see the impact right away. Auto sales, home appliances sales. So naturally, you want to build on that success and increase the subsidy, broadening out the categories. In China's system, we had the money used up by the end of last year. Now, coming to New Year, everyone's waiting for 2 sessions, giving the comprehensive package of fiscal stimulus. But between now and March, you still need to support the economy. So I think of this as early January, the local government needs guidance from central government, how much, what kind of product, because at the end of the day, policies are implemented at the local level.
Do you think that's going to be enough to sort of reignite any sort of consumer sentiment, at least between now and March?
I think you have to do it because this type of a trade-in program, we labeled it as China's cash for clunkers, right? You saw what happened back in 2008, 2009. When you have this program, sales increase, but as soon as the program ended, you have a payback impact, right? Because everyone who's planning to replace their air conditioners, refrigerators, took advantage of the program. So by default, if you want consumption to be stable from Q4 to Q1, you have to do something.
In some way, we can call it a trade-in program. It's a subsidized program. So effectively, people are buying at, correct me if I'm wrong, lower prices. Is this contributing to the lack of inflation, you think?
Not mechanically, because let's say if the car is selling at 200,000 RMB,
right,
and the government give you a subsidy, when you measure CPI, it's still measured at 200,000 RMB.
We're just getting some lines from Movcom right now talking about, China essentially asking the US to stop its wrongdoing. That does appear to be linked to this US military blacklist that some Chinese firms were added to. We had Tencent, for instance, CATL, shipping company, Costco as well, SenseTime, that's an AI firm. How much are these geopolitical headwinds factoring into the conversations that you're having?
Quite a bit. Yesterday, our equity analysts covering these names put out a research report detailing the different type of a list. And for investors, you do have to sort of understand what's the implication specifically. But broader picture, people are concerned about the deterioration in U.S.-China. People talk about tariffs, but beyond tariff, there are other frontiers or areas where you can see this type of negative headlines impacting the market, impacting confidence.
Is this a bigger problem, you think, for domestic policymakers? Simply because it's harder to measure something we don't know yet. So in other words, the counter or the offset that many people are saying they're holding back because they still don't understand how Donald Trump is going to approach this. How much of a how much uncertainty does this add actually to the economic equation this year?
Yeah, I do think this is tougher to navigate, even in policymakers' mindset, that domestic issues, because of the all the resources, the capabilities of different levels of governments and ministries, they feel more confident to manage versus is from external, from something they don't have control, they can't predict. I do think that adds a layer of complexity and uncertainty. And if you trace it down for investors, if I understand that the government, the Chinese government, is navigating something difficult and potentially there could be unintended escalation, then I get nervous and I want to be more risk averse. So you can see how between the government and investors and the economy, it is a bigger challenge.
And it's certainly a challenge when you're facing market dynamics because China has signaled that it wants to keep some cards up its sleeves and it has the power to fight back. But so far, the defenses we're seeing early, for instance, in the defense of the yuan and in the defense of bonds, urging investors that it's not a one-way bet, isn't really sort of seeming to have much of an impact.
This is, I think, in my client conversations, I can sense this almost Chinese policymakers and foreign investors are not on the same wavelength, in the sense that Chinese policymakers are thinking to boost confidence that I need to set a high real GDP growth target. But foreign investors are thinking if you're going to just achieve the real GDP target, you're going to produce more cars and more machines, and what you really need to do is inflation and nominal GDP. And Chinese policymakers are thinking if I fix the CNY level, that's confidence, that's stability, that's power. But for foreign investors, they want to see, in fact, from any other free flow currency, you wanted to depreciate. That's easing your financial conditions. That's helping your economy. So a lot of times, I think the intention may be coming from the same place. We want confidence. We want China stimulus. We want China to sort of have a positive spillover on the rest of the world. But I don't think they are talking the same thing.
Since this live briefing reminds me of the one that we had that kicked things off back in late September. So simple question for you. Since that point, what's improved in the economy?
I think at the surface, retail sales, auto sales, home appliance sales, it's pretty clear that if you subsidize and the consumers won't make a rational choice and things improve, right? Okay. We are seeing some, for example, ahead of a Chinese New Year, there's some acceleration in activity because the migrant workers need to finish their work and go back to home. Mm-hmm. You're seeing exporters front-loading exports, fear of upcoming tariffs. So activity is not that bad. You look at all these indicators. But at the same time, I think investors, judging from the market performance, having to juggle with uncertainties domestically, externally, and also their expectations. They want the government to go all in, whereas Chinese government seems to want to leave more policy room, and that just leaves a bit of a vacuum or disappointment on the risk assets.
And it does seem like maybe the disappointment is accelerating a little bit as well. I mean, I think we've all been tracking the moves in bond yields and that continual slide that we're seeing. There is a concern that maybe we're looking at a situation of Japanification of the Chinese economy. Do you see that at all?
Whether it's Japan or China, I think a lot of the economic principles and fundamentals are similar in the sense that if you have a large amount of debt, right? You look at China, how much debt total outstanding? 300 trillion RMB. For every point of decline in interest rate, that's 3 trillion RMB of interest savings per year, right? Yeah. So the gravity is that you need to have a lower interest rate to manage debt, to support growth. Whether it's Japan or not, it just seems to be the right direction of a movement. We can't predict whether the yield is going to go up or down next day, next month, but you can see the logic why markets expecting Chinese interest rate to go lower.
Or you grow out of it. Like sometimes growth is able to offset some of the debt load as well. And I guess my question there right now is, are there specific, and I think what's interesting too, it's a little bit of confusion, I'm not sure if you could add more clarity to this. When the PBOC changed their monetary policy stance for the first time, I believe, in 14 years, after already many cuts to various interest rates, after yields have fallen as well, and I'm wondering, what further action, future action, does that actually open up? That's number one. And number two is, are there specific policy tools, monetary tools, that are already running, are close to the edge of efficacy, for example?
Yeah, we get this question a lot. Even onshore, there's a debate about whether monetary policy is useful. There's no demand for loans, then cutting interest rate, it doesn't seem to help that much, right? If I don't want to borrow, you give me a 20 basis point cheaper loan, doesn't seem to help that much. I want to emphasize that if you look at all the downturns globally in any other country in any point of history, when it's an economic downturn, demand is weak. Banks don't want to make loans. Monetary policy transmission will be lower. But that doesn't mean we shouldn't be cutting interest rate. We shouldn't be making it easier. So in that sense, I do think going forward, the PBOC we are expecting them to cut interest rate. Perhaps the timing is harder to predict because of tariff FX management, all the other constraints. We are expecting them to continue this path of helping on the property sector, helping on the consumption front. And we need easier financial conditions.
All right, Hui Shan, stick with us. We've actually just had the first line coming out from this briefing finally that China will be providing a loan discount for equipment upgrades. So we're going to dig into the details of that just ahead. As we said, Hui Shan from Goldman Sachs. So we were just speaking there in the ad break, and you were explaining some of the nuances of what we had already seen in the white goods program, or what we'd seen in the fourth quarter. It was the business side that had seen a few bottlenecks. So do you think this is sort of about trying to ease those a little bit?
Yeah, it does sound because if you look at Q4, central government allocated 300 billion subsidy, right? 150 for equipment upgrading, 150 for consumer goods trade-in. The consumer goods trade-in program, you see retail sales showing the data, it's effective. But the equipment upgrading part hasn't, they found some bottlenecks because in this environment, if you have excess capacity and you don't think a business is picking up, you might be reluctant to replace the old equipment for new equipment, even with the subsidy. So I think there's some debottlenecking and lesson learned because this is implemented at the local level. Some regions are more successful than others. Is the application process, is the refunding process, anything they can do to improve how well the programs runs.
I mean, this goes back to the confidence issue, doesn't it? Because effectively, say you give money to consumers or businesses, consumers will just keep them in the bank. And I guess my question is, have they done enough, or have we just not waited enough for these things to actually filter into the real economy?
Yeah, I think what you're mentioning, this permanent income hypothesis in economist language, that if I just give you money one time, you might just pocket it because you know this is just one time. But if I tell you I'm going to give you a raise every single year, then you feel, okay, I can afford it, increasing my consumption. That is why Chinese government has been talking about potentially giving money to households with multiple kids, increasing the basic pension for rural retirees, because you know you're going to get that money month after month. You should feel okay to increase your consumption on a permanent basis. So I think this type of a program seems to be in the pipeline, but we do need to wait a little bit because it's brand new. It's something, a big program. You need to think about the design, the implementation, and the rollout.
And I think recently, didn't China increase the wages for government officials?
Yeah, they did. Yeah, I think
but there was no big official
month.
announcement, though, on that.
No, I don't think it's actually been confirmed. I think it was our Bloomberg reporting.
Right.
And it's around 68 or 70 US dollars a month. But it is the first wage gain that we've seen in a number of years.
Yeah, I mean, so what's the outlook for your outlook for wages, both public and obviously separate private sector?
Yeah, so the labor market data are not the best in China, but to an extent you can track PMI's employment sub-index. To an extent you can look at various wage indicators. Labor market is facing pressure. It is difficult to find good paying jobs. So if I just look at the aggregate level, government giving money or increasing wages of civil servants, that helps aggregate demand. Whether that's going to be enough or not is another story. But I think now the key question is to make sure whatever stimulus, monetary, fiscal, we have enough of support because to really kick the inflation into a positive trajectory and kick confidence from a downbeat to more upbeat.
Just another line coming from this briefing is that China's looking to raise subsidies for consumer trade-in to 20% of price. What's your reaction to that? And just second to that as well, looking a little bit longer term, 12 months from now, do you think the Chinese economy is going to be in a better position than it is today?
Increasing the subsidy, so this is I assume at the central government level, and local government can also chip in and increase the subsidy. And by broadening the type of a product eligible for trade-in and increasing subsidy, that should help increase retail sales of these products and therefore help consumption and growth overall. To your question, 18, 20 months down the road, what are we looking at? I think it really depends on whether we see signs of stabilization in the property market, whether we see the signs that the deflation in PPI start to narrow and start to move into a positive territory, and companies are making money and fundamentals are improving. So a lot of, and certainly we talk about tariff, and we are having our macro conference next week here in Hong Kong. We'll have speakers specifically addressing U.S. policy and tariffs. So you can see a lot of pieces need to fall in place for us to see a fundamental shift.
All right. And as always, we look forward, of course, to the updates from the Goldman economics team and research team. I get that regularly. Thank you so much, by the way.
好了，给大家总结一下。首先，第一个就是谈到了一个投资与地缘政治风险的一个关系。地缘政治风险在他们的一个投资决策当中也占据一个非常重要的地位。未来中美关系的一个不确定，可能会导致中国企业被制裁，就像华为啊、大疆之类的这种企业会被制裁。第二个呢，就是美国对中国的一个关税的一个影响，这都会直接反映在股市里面。所以这是他们做投资的一个重要决策的因素之一。第二个，他谈到了一个很有意思的一个点，就是中国政府的一个政策制定者与外国投资者观念上的一些冲突。打个比方说，中国政府的政策制定者，他们要保持一个 GDP 的高增速，但是外国投资者认为，高增速的 GDP 一定会加剧目前中国的一个产能过剩。但是呢，目前整个中国一个通缩的一个情况下，它实际上不是缺产品，它是缺钱，所以你保持 GDP 的一个高增速，目前来说不是一个必要的。再就是谈到了一个25年的一个整体政策，认为中国政府还会降息，只有通过降息呢，才能刺激房地产、刺激消费。虽然降息不一定能够真正的去刺激房地产、刺激消费，但是也要走这一步。为什么？因为要让市场上的钱变多。然后谈到了12月底中国政府的家电补贴之类的一些需求端的政策，目前整个在国内推行的不是很尽人意。为什么呢？因为第一个，现在这种经济形势情况下，很多人都会捂紧自己的钱袋子，就是除非必须要换了，才有可能会去考虑。如果是还能用的情况下，一般也不会因为这点补贴去再换一个新的电子产品啊之类的这样昂贵的东西。对于企业来说就更是这样了，一条生产线只要能用，它就会一直用下去，它不会再像前几年那样疯狂的去买地盖厂房再增加生产线，因为现在的经济形势已经不允许他们再这样去做了。最后呢，谈到了无论什么样的政策，目前最主要的就是2个方向，刺激居民部门的信心，走出通缩的一个状态。好了，本期视频就到这里，感谢大家收看。